Hello, my name is Nicola, and welcome to my first ever investing finance video. In this video, I would like to tell you how to get started into trading stocks on your own and how to get started into personal investing. So the first thing you want to do is find a selection of publicly traded companies that you're interested in. These could be companies you have some familiarity with, such as household names, or companies you've heard from a friend, or companies you read about in a research report or a news article that you would like to keep track of. So the first thing you want to do is download an application that will help you keep track of these companies. So something like My Stocks Portfolio that can be downloaded onto your phone, or something like Yahoo Finance where you can create a portfolio. I'm pretty sure you can do it there, although I just use My Stocks Portfolio. Anywhere where you can save these stocks, where it shows you the chart of the stock and some details about the stock. Now, what they also have to show you is links to news articles about the stock. So your portfolio should show you the company names. You click on them, it shows you their stock price, and then it tells you news related to that specific company. So then what you look for is when you see significant price change. So you'll follow these stocks over time, and the price will change. And when you see a significant change, such as an upswing or a downswing, there will be a news article related to that event. Most of the time, for bigger companies, there will be some sort of news. And then you can read this news, click on the link, and learn about what's going on and what's influencing the price of the stock. The most important news, in my opinion, that you can come across is an earnings release. What this is every 3 months, so every quarter, there's 4 quarters in a year, every quarter companies release their financials and as a checkpoint into how they're doing, how their business is generating money. And so you can read the news articles, will sometimes summarize the main points from the earnings release, but it's also very helpful to read into the actual earnings report itself. You can find this by going to the company website and scrolling down to the link that says Investor Relations. Once there, you can click it and you'll be taken to different filings. And the general one you should first look at is for presentations. And you can find a presentation about the last quarterly report or the last yearly report. It might not be yearly. Yearly is for just financial statements. But you can read the PDF presentation, and it has nice graphics and summarizes the highlights of the company's progress this quarter, such as revenue, earnings, and future guidance for how the company thinks it will do going forward. Then you can also read the edited transcript of the earnings call. In this, the CEO gives a mini presentation about summarizing the highlights of the company's progress this last quarter. And then there are questions written down that analysts have asked, and the CEO or CFO answer these questions. And then you can see how the company is going to solve these challenges or take advantage of new opportunities it has. And the last thing that you can look into in the investor relations link is the financial filings. So this is ultimately what the reports are about. It's about how much revenue and earnings and profit the company is generating. So if you search for filings and search for the yearly filing, the most recent year or the most recent quarter, you can find a PDF or an Excel file, and in it there'll be broken down line items such as revenue, taxes, and cash flows. And then there's an income statement, a balance sheet, and a cash flow statement. So you can read all three and learn about the different uh, numbers. You can Google what they mean, and there's a lot. Initially, it will be hard to follow, um, but you can search for the main ones, like top and bottom line, which are revenue, top line revenue. So you can see that's generally the first thing in the income statement. Um, and you can see how that's changing over years, whether it's stable, whether it's growing. And then you can check out the cash flow statement and check out free cash flow, how much cash the company is actually generating after all expenditures. And then you can check the balance sheet to check the assets and liabilities and see how much debt versus how much free cash the company has, so that it's not placed in a risky situation. So once you've done all these three, then you can start to develop a thesis on how you would like to enter and exit your positions. So for me personally, I swing trade, which means I look for prices that have dropped and I look for temporarily recovers, which means I invest from like 1 month to 1 year based on everything I've told you. Watching the price move, reading the news articles and reading the financial statements, and whether I think there will be a short-term recovery, then I enter and exit a position that way. And I judge this also based on my intuition of how the price is going to move. So over time, I pick up patterns and indicators of how price patterns behave. It's never perfect, but you generally can, after you follow specific stocks for a while, you can generally develop a sense of some direction you think the price is going to follow. So that's how you would get started into investing. And over time, you keep up with your watch list, you keep up with the news, you keep reading earnings reports, and you break down financial statements more and more. And you develop an overall trading strategy and you stick with it. And the last point to cover is proper money management, which means don't risk more than you can afford to lose on a risky investment. So the more risky the investment, the more you have to be careful with your money and manage your money, how many stocks you want to buy. I would stick to just a few while you're starting out, and it's always good to stick with what you can keep up with. Diversifying is good, but also if you can't keep track of all your investments, then it's better to stick with just a few. So thank you for watching this video. I hope you've learned something on how to get started into investing. Best of luck in the markets, and leave any comments or questions you have down below. Thank you. Bye.